Hi there, traders. This is Brad Gilbert with today's trading action. All right, it's February the 14th, Wednesday. So let's just have a look at what's going on now. The big data release yesterday was the US inflation numbers. Now, the numbers slightly better than expected, right? The consensus over here, 2.9, came out at 3.1, month on month, 0.3. And the core numbers there slightly higher as well. So a little bit of dollar strength that is in the market, right? It's across the board. You can't be mistaken. But this sets us up for some good trading opportunities from here, right? Even if you miss this. Now, the dollar has sort of taken off. Now, these numbers were slightly stronger than expected, but they're not like just off the charts, right? So what I'm seeing here is a bit of a clean out, a bit of an adjustment to the Aussie and Kiwi sort of got a little bit pummeled. What we saw on the major instruments, if I just come back to the global markets quickly, now, this is something that you need to be aware of because it's going to be in play, right? So you got the US yields here, right? The price is down. Now, let's move my video there. That means the yields are up, which means, say, US interest rates are higher, right? Interest rates higher means equities lower, right? And then also what we get here is the direct relationship between the equity markets. It's like a risk on, risk off sentiment. Now, if the equities come off, it's risk off. That means you sell the commodity currencies, easiest way to put it, Euro, Sterling, Aussie, Kiwi, and the dollar rallies, right? With the renminbi being the odd one out. So that's what we're seeing. So you can see very clearly in the market exactly what's happening. For me right now and today, like there's one thing that I'll be focusing on. And this data, the CPI number, really does bring in the US treasuries as probably a bit of a driving force here, where the markets, traders in the equity markets, currency markets, etc., will be watching the treasuries, US treasuries, to see if those yields are keep going up or not. To me, it's an adjustment, right? As I said, prices down, the yields up. I don't think we're going to see too much more unless we see more stronger data. As I said, the US CPI numbers were slightly stronger, giving the US dollar a little bump. And that's what we've got. So just looking at today's numbers coming out now, the market is reacting very well, right? If I just go up just a touch, we did see sterling jump up very aggressively on the stronger unemployment figures, right? Then you had the Chinese Swiss inflation numbers were weaker. Dollar Swiss was already rallying. Then we had the stronger dollar, and that was the nail on the coffin. So the dollar is running. But the good thing is, what I'm trying to explain here is that all these numbers, the instruments were very reactionary. Inflation numbers in the UK, very important, right? So unemployment figures, really good. You've got to expect over this seasonal move through the holidays, all the numbers across the board have been coming in stronger, especially employment, which tells me everyone's trying to work as hard as they can to pay their bills. So this has the potential to go up or down. Just keep an eye on the consensus here. Employment GDP numbers out of the Eurozone, they're sort of like a peripheral number to the inflation numbers. And then you've got a couple of Fed officials speaking, but that's it. So right now, the market is going to be watching these numbers very closely to see what happens. And it takes time for these moves to filter into the market, right? When you're looking at the charts, you're looking across the board and you think, well, what's going to go on? Well, right here at the moment, the markets will just wait and sort of let the dust settle. So there's no need to run straight in today unless we saw some sort of big event. But, looking across the board, if you had your technicals in play, you had some great levels. I was focusing on dollar Swiss and euro. Both sort of kicked in quite nicely. And that's it. Euro stalled here around 107. Smart play taking profit around there. And, so that's what I was just going to show you, the daily charts, right? So just look at these daily levels. The CPI wasn't enough to break these bigger trend lines. I think the dollar Swiss right at the level, the dollar index, Euro wants to go, but it's just looking for confirmation. And that's where those Eurozone employment numbers and GDP numbers can come into play. Sterling, well, still in the range. Aussie and Kiwi, still in the middle of a big range. I'm talking long term. Dollar CAD looks like it wants to go higher. Weaker CAD numbers would be good. And dollar yen, well, with those treasury yields going up, US yields, you got to think dollar yen keeps going. That's the longer term picture. Try and match it up. So a little bit more of a push, and we're going to see euro and dollar Swiss run a bit further. And that's what I'll be sort of keeping an eye on from here. All right, guys, that's it for me. Just keep an eye. This isn't like rocket science, as I was going to say there. Just keep an eye on the Treasury yields. See if the prices are going up or down. That'll tell us a lot about what's going to happen with the yields, and that'll tell us directly what's going to happen with the equity markets, and that flows into the currencies. Right? It's a bit of a 1, 2, 3 situation, but that's the easiest way to cross-check. Make sure the markets are behaving normally. If they are, it gives you confidence. Go find some levels and let's get into some trades. All right, guys, good luck. All the best. Cheerio.